Congress is proposing to end the 30% federal tax credit. So it's pretty relatively new news. Rumors were circulating about 2 months ago on this, but what we're going to talk about is the one big beautiful bill, and in the big beautiful bill, there's section 112006, termination of the residential clean energy credit. Long story short, the provision, now all this needs to be voted on, right? But basically, the administration has taken the entire solar industry, just thrown it into a gladiator pit. And we have to prove that they shouldn't do this. And I think by the end of it, I'm going to show some market insights, and I hope you find value here. But if you're a homeowner, this is huge. This provision accelerates the expiration date of that 30% tax credit. So it was going to go down until 2034. This ends at the end of this year. And this is going to cause a massive problem in the market, whether that's what we're looking at in terms of supply chain and installation bottlenecks. And so I'm speaking from New Hampshire. We have one of the highest electric rates in the country, and we're one of the few states left that has kind of a true net metering policy agreement. We're not like NEM 3.0 that you see over in California, although I do think that everything's going to move in that direction whether we like it or not. But this provision right here, that means that there's going to be a 30% hit in the solar market as a whole, from manufacturing all the way down to small business, overnight. And these utility rates are accelerating, and they're continuing to accelerate. I love to show people this. This is the most ridiculous chart that you could ever see. So what you're seeing here is from the Federal Reserve, and this is the average price of electricity, right, in the United States from the 1980s to 2025. It is crazy that this chart has never seen a bad day. This is probably one of the best financial growth charts I've ever seen. Never a bad day. All we see are these crazy increases that we went through over the past 5 years. And I love the people at Eversource. I think the guys that work on the lines are fantastic. I think it's actually a great company. I think that we have an aging grid. And these costs, as we electrify everything, are happening, and they have to come somewhere. And I think the utility company has a hard time kind of saying that. But still, we're seeing these 17% increases, and now we're looking at an entire industry getting axed here at 30%. So what does that mean for you? So here I made a mock-up system. Okay, a couple assumptions for this system. So this is a New Hampshire system on the Eversource grid. Sorry, Eversource, I'm using you for the example. Love you guys. Thank you so much. It's fun working with you guys. But this is a 12.04 kW energy system, DC. So that's the solar panels up here. And with the 30% ITC, the net system price is $25,539. So let's take a peek at that. So it's all about the payback period. So this is how this system was priced. So in the New Hampshire market, we have roughly, I'd say about 10 companies on any given Sunday competing for only a select amount, really, of potential customers that are willing to go solar at that point in time, unless you expand to other states, which obviously the bigger guys, and we do. But in the market, you want to kind of establish a base case for the pricing model. And then the customer kind of dictates, what is valuable to them. And you want to start that conversation at this idea of $3 a watt for tier 1 equipment. So like in terms of equipment here, I have the Qtron 435 watt modules on Enphase IQ8A inverters, or IQ8MC is a little bit less in terms of AC output. But tier 1 equipment, made in America, Iron Ridge racking. So we're hitting all the made in America things that you're going to be wanting to look for. And all the stuff 20-year warranty backed, right? And with that ITC, you would be saving $10,945 off your solar energy system. And what this bill is saying right here is that on January 1st, 2026, that is gone. I mean, if you're a homeowner, I don't think it's possible. So like, you might get 285 a watt on like the local handshake, $3 a watt for a company that's always going to be there, show up for maintenance way down the road. It's just like a good price point. And then 325 if you have some out-of-staters that are coming into the market, or you're more of a large corporate type structure where you provide that value set, right? But still, this is going to upend absolutely everything. So if you're a homeowner, I think that you're going to see a bottleneck in building permit times, because there's going to be a massive influx of people trying to get this 30% tax credit. And I think that you're going to see a massive bottleneck in just how many installers can actually install this in time, right? You have to kind of meaningfully have your project done before the end of the year. So I think that we are looking at, you have to move quickly. I would move quickly, because this type of price action, and I'm just talking local New Hampshire markets, and I see a lot of bids and I see a lot of competition. Have a lot of fun with it. It is pretty cool. But this is extremely significant, both on a total domestic, international level, really. So I wanted to bring up this Sunrun chart. So here's what I think is going to happen here. I think that a lot of customers are going to come in and they are going to want to beat this bill. And I have a feeling we are about to get extremely busy, because they don't want to pay this price. That you want to get the 30%. If you can get 30% off, you get 30% off. I don't care what. If you want to be energy independent, you gotta move on that. So I think that Q3, Q4 companies like Sunrun are going to have spectacular earnings, but what we see on this year-to-date chart is this big spike here. And I mean, this news just hit the house like formally, really, like what, 48 hours ago? Maybe 2 months was when early tweets started circulating around about this potentially going into the bill. But what I do know is the solar industry here has got to prove that we create a lot of jobs, not just jobs in solar, but I mean, I've created roofing jobs, I've created architectural jobs. I mean, the amount of growth and networking, I think I've done a lot of good here. So I'm over here saying I'm not sure if you want to stifle such an important industry, especially in terms of energy grid security on a national level. But if we take away that 30% tax credit on Q1, I think that these large companies and financial models from it are going to have a really tough time. So this is like a fascinating thing in the industry. So if you go with like a large corporate kind of solar company, right? They have deals with the larger financiers of solar energy systems in the market. That's going to be like Mosaic, Dividend, Sunlight, all those guys. And what's really popular are these things called PPAs, and this idea of a pay down on the loan to kind of like lock in a lower rate, right? And this is all centered, this price action right here is all centered on this 30% tax credit arbitrage. And if you think about it from a banking standpoint, when you have bills that guarantee that 30% off is going to come from somewhere or something, it allows for people to charge 30% more because they kind of know that it's covered. And it's a counterintuitive way of looking at it. But what I mean is that 30%, if that gets removed from these loans, it makes it very difficult for large companies that require a lot of sales because of tighter margins. You're going to see a big dip because these rates are not going to be the same. A whole bunch of customers overnight are going to essentially become unqualified to these companies, and sales are going to dip. Q3, Q4, I think it's going to be insane. And then 2026, bam, train stops. They're not able to offer the financing. If they can't access customers at lower credit thresholds and people who don't have, how much was it? $36,000 cash to spend on a solar energy system. Man, I think that you're seeing a really big problem that happens right here. And these PPA amounts. And you see, but I also understand where this bill is coming from, because you also see like this kind of like sketch stuff with solar dealer fees. And it goes, I'm not pointing anybody out. I'm just saying that there are these things called dealer fees. And there are agreements between banks and solar companies, and they're like kind of not disclosed. I refuse to do it. That's why I go local, regional, certified B Corp bank. The girls over at Mascoma Bank, absolutely fantastic. Some of the best rates this side of the Mississippi. But these solar dealer fees, no dealer fees if you go with Harvey Woods, but can run from 15 to 40%. And I think that this does come from this financing glut of that guaranteed 30%. It's the same type of action that you see with student loans. Just because it's a bill and it's backed by the full faith of the United States government, right? This tax credit allows for that value to kind of be arbitrated. So I see this incredible moment where a 30% cost is going to hit the solar market, and I'm not sure if these current companies, because of the 30% credit, I think if you live in a 30% credit environment, it makes it where it's easy for your company to not innovate, because you just don't have the financial pressure to continue driving down costs because the government does it for you. I'm willing to see where this is coming from here. I still think that this creates a lot of great paying jobs that solve a massive concern in terms of energy security and diversity in the United States. But that's a different conversation. I'm more focused on how am I going to help this many people with something that's happening, this fast. And so I think I do have a great strategy. I think the future, a huge opportunity here in the market. If you're a small company, you're nimble, you're lean, you're using technology to your advantage, there's a big opening here for that 30% to kind of get solved, kind of in these. This is the U.S. solar employment growth by sector, but these are like the main sectors. If you can use things like N8N, ChatGPT, agentic models, start making things where instead of, here and there having to pay $40,000, $50,000, $60,000 for processing and different things depending on a certain number of projects. If you're able to leverage AI systems, automation, you can solve, maybe get 8% there, 10% there. The big one is manufacturing, though. How are these manufacturers going to continue to deliver their financial results when we're looking at the large installers who rely on financial products that utilize the 30% tax credit having sales that dip because we're losing 30% of the market overnight? And I think that there's a big issue here. Also, a huge opportunity for somebody who's taking a step back and saying, like, maybe there are opportunities here in this business model to really succeed. But regardless, at least in this market, I'm forecasting an incredible influx of sales here because people want to take advantage of this $36,000 just because this type of financial impact, it's the difference between 3 and 4 years on a payback. Although I do think that a 10-year payback, when you're looking at a model like this, I think a 10-year payback on a major home improvement project is reasonable. It's a reasonable thing. And then you have an additional 10 years on that product of complete free energy use, which I can only see in a housing market like this as the ability to generate energy and charge electric vehicles and stuff moving into the future. I just don't know how that's not valuable in the real estate market and things that we're seeing in real estate. I do think that solar real estate is going to become a very real thing here, which is something that I wish the administration would kind of look at it a little bit different, not exactly go after solar because of clean energy in that narrative. It really is solar real estate. Every ounce of real estate that hits the United States where the sun hits it has the capacity to generate usable electricity. And I think that that's really a fantastic thing that hasn't truly been able to be deployed and valued yet until today. But I do think that how fast markets like that accelerate, I do think that is the benefit of having a system like this in place. Like I said, I run a solar company here in New Hampshire, and this company has allowed for me to create jobs across home building as I've grown. I've been doing it for about 10 years now, full stack, and yeah. If you're watching this video still and you live in New Hampshire, Maine, or Massachusetts, and you haven't dropped by the website, www.harveywoods.io, just fill out the thing. I'll put together a free design. I'll basically make one of these designs for you, and I'm pretty darn accurate. this is like super rudimentary. When we confirm everything, we build out like 3D models and stuff. But I wanted to show you, what does this look like on a solar energy contract on an average pricing model, maybe a little bit expensive, but an average pricing model with really great equipment. What you're going to see in the New Hampshire market with everything that we have, and the impact of the difference between 2025 and January 1st, 2026. And in this use case, in this example, I'm showing you $10,945. I think first mover advantage here is going to be critical for homeowners. I think people who get in line first get their paperwork fit, because your paperwork takes 30 days. Takes a while, 30, 45 days. And if everybody starts getting solar, that these offices are going to get backed up. So yeah, I mean, send your information over to the website. I hope you enjoyed this. Was able to kind of see some interesting points and things that I'm thinking about from both the business end and how I can best help customers and explain and break down what's going on here. Obviously, like, follow, subscribe. If you have somebody that would like to watch this, share it. And I hope everybody has a nice night. Okay, bye.